Warren Buffett's Berkshire Hathaway Meeting 2020. My 5 biggest takeaways from the entire meeting. Hey and welcome to today's video. My name is Julian. On my channel, it's all about investing, mainly in Bitcoin, making people crypto fit, but we discuss stocks, general ideas, precious metals, many other things on this channel. And so today I want to give you a summary on the 5 takeaways that I have from the Warren Buffett Berkshire Hathaway meeting from 2020. If you've never actually seen this meeting, I tell you one thing: go to this meeting one time in person. Now this year, obviously due to COVID-19, this was not really possible, so this meeting was completely different. It was Warren sitting without actually his partner, Charlie Munger. Actually, he had one of his potential followers actually sitting with him. But he was sitting in this kind of board meeting kind of style with the camera. And yeah, normally there are 60, 70,000 people who all line up at 3:30 a.m. to get into this meeting. I was actually there, I think this is now 4 or 5 years ago. I can't even remember, quite some time ago. And I can highly recommend trying to go there 2021 if it happens as normal. Who knows how long Warren is living, and you can see a legend there. So watching this video, right, a few general things. Obviously you could see a bit of a different flow. Normally Warren is way more cheerful. He's quite witty, he's funny. And I think also with the circumstances right now, this might not have been the case. But also I think because obviously the environment is different. He doesn't have all the people there, and he's definitely someone who loves to kind of play with people. And also you could see on the camera that he is getting a bit old. You could see that he was a bit fragile. His answers weren't as forceful or as strong as normal. And I think in general he was quite cautious on an outlook for the future. I don't think it had anything to do with him losing $50 billion in Q1 2020. I think this is way overblown in the press, but this is definitely a couple of things that are quite interesting and relevant here. But so with this, let's go into those 5 key points that I felt were really interesting to see. And point number 1 was him kind of admitting some mistakes. And I think many people really struggle with admitting mistakes. And that's the key thing. Admitting wrong decision making. It's not so much about the results. Sometimes, or many times actually, results have a lot to do with things you cannot really influence, or that you cannot really kind of decide directly. But what you can have an influence on is your decision making. And in this case, he talked a lot about making this decision, investing into airlines, and him saying that he didn't calculate those risks properly, and so on. I'm not 100% sure if he's right, but obviously it is quite powerful in admitting that his decision-making on certain things is not on par, maybe as it's supposed to be. That's a bit of a general idea here. Obviously, in the dot-com bubble times, people also said Warren lost his touch. Now, I don't directly want to say that Warren lost his touch. That's absolutely not what I'm saying. But I think that especially over the past 20 years, there are certain companies, there are certain groups of companies that lie definitely outside of Warren's kind of circle of competence. That's what he calls it. And I think especially a younger generation is kind of understanding this way more and more. And I think going forward, especially with COVID-19, it might actually be quite interesting to see how Warren's stock selection is actually performing. And I am a long-term Berkshire Hathaway holder, so obviously I hope he's doing well, and I'm a really big fan of Warren Buffett's investing philosophies, and I try to kind of adjust them to our daily kind of investment environment, especially when it comes to cryptocurrencies and newer companies. But I'm sometimes asking myself, maybe like there are certain investment opportunities today that he just doesn't see because of, well, the principles that he kind of grew up with. And also considering, and that's a key thing, looking at how Benjamin Graham invested and basically the mentor that he learned from. Benjamin Graham's investment philosophies in picking up those cigarette butts, basically, that's what he called it, wouldn't work as much today anymore because this information discrepancy is not there. And so you can see those different types of waves, and you can see different types of values that you could find. And I think that's quite relevant in this entire thing. Now, point number 2 was an interesting one because it was the explanation on why Warren didn't manage to deposit more cash and kind of benefit out of this crisis that happened mid to end of March. And well, many investors, also myself, I deposited a lot of cash into the market in crypto and in stocks, and obviously really beautiful returns. But so obviously, and I know many other investors and players did as well. But so why didn't he? And I think that he was a bit taken by surprise. And also I think his general investment philosophy, which is quite cautious, didn't really work because the Fed stepped in that quickly. And he described this. He said, look, there was such a short time frame that things were undervalued and we couldn't move all this cash in such a brief time. And also the typical type of deals they would be doing. If you think about 2008, 2009, where they were doing a lot of loans, suddenly this didn't work because the Fed came in that quickly and provided so much confidence in the market. And yeah, obviously this makes sense. To me, this was a very important explanation because I would have expected Buffett to actually have been buying a lot of kind of companies or kind of depositing cash. But I do understand that there was just a really brief time. And I do also understand that Buffett could think that the future is bleaker that many other people might be expecting. Now, obviously, lesson or takeaway number 3 is in stark contrast to what Ray Dalio is teaching, which is cash is trash. And looking at Buffett, he sits on this all-time high cash position. Now, obviously, this doesn't sit as cash on a bank account. This is in bonds. But still, at the end, these are cash equivalent. And so who is right here? Is Dalio right? Is Buffett right? And I personally obviously think both are right. How is this possible? Well, it's very simple. It's all about diversification. No one knows how the next 3 months, next 3 years look like. And you want to have powder that you can kind of use. You want to have enough firepower because at the end, that's the only way how you can actually benefit should there be a significant setback in the future. What this means is, and I see this a lot in the crypto community, so many people are negative towards fiat. And while I do kind of share a bit of that sentiment, I would also love to kind of call for a bit of being cautious because who knows what the future looks like? Who knows if there's going to be deflation, inflation, if we're just going to have a normal growth? Who knows if we have a low interest environment, a high interest environment? No one knows. Obviously, all the Bitcoiners and all the crypto people try to push this narrative of hyperinflation, and we might have it. And look, that's why I have a significant crypto portion right now because, I mean, I do share some of this sentiment. But I also understand a potential deflationary sentiment. And in a deflationary sentiment, cash or cash equivalents, anything that has any kind of cash flow is winning. And so just kind of keep this in mind. Keep in mind that you want to, especially in times of a crisis, you want to be better safe than sorry. And these are just things that you really want to pay attention to. And I think Warren kept stressing this over and over and over that no one knows how the next year, the next 2 years look like. And he said, hey, it might get really, really dark. And I think that's very, very important in this entire kind of philosophy around this. And that brings us straight away to kind of takeaway 4. And that obviously a lot of questions were around this. I mean, that's the cool thing about it. Average people get to ask him questions and he actually answers them. He doesn't see the questions up front. So any kind of question comes up, kind of pops up. And obviously one of those questions is, what does he see? How does he see the future happening? How does he see the entire economy going forward? And there were a couple of things I think he highlighted. First of all, he really highlighted that you had to have a long time horizon. So it's not about it being good to have a long time horizon. It was about you have to have a long time horizon. If you don't have a long time horizon, you're definitely going to lose. And I can totally understand that. I really think the way the decision making has been happening with many governments and many countries, we are going to get into some type of recession. Question is this going to be a deflationary, an inflationary? There will be some type of recession and there will be businesses going out of business. There will be incredibly high unemployment. There will be businesses that were super solid for the last 30 years that are suddenly going to struggle. And I can totally see this going forward. And Buffett really cautioned about this. But then the other thing was, if you have a long time horizon, that's basically what you have to have right now, and also only buy stocks if you have this, he really highlighted that, then, well, don't bet against America. And I also think so. I think the US is going to get out that strong. I think at the end there will be many countries. I live in Singapore. I think Singapore is going to do really well. I definitely also think some of the other Asian countries, I can totally see China getting out of this super strong. Certain European countries, well, some European countries will really struggle, and some European countries probably gonna get out of this super well. And I can see countries popping up that, well, just really kind of outmaneuver this entire crisis, and they just have really good decision making, and they're really long-term focused. And I sometimes think, especially when all these emotions come in, when fear comes in, that's what fear does. Fear shortens the time horizon. This is a book I wrote, The Time Horizon Principle, and it's all about how successful people, even in time of a crisis, time of fear, they keep a super long time horizon. They don't kind of shrink down. And I still see a lot of leaders, a lot of governments right now, only looking at the now, only looking at the next month. They're not able to kind of plan ahead for the next years, for the next decade. And well, I understand it's difficult, but Buffett really kind of highlights that, and I totally agree with him. We're gonna have some really rough times ahead, but I think in the long run, over a decade, I think it makes a lot of sense betting on some of those winners right now. They're just gonna keep continuing growing, and actually, I really believe they're actually gonna expand their market share. We're gonna see companies that are super large already, and they're just gonna keep growing and keep getting larger. And obviously, these are the companies as an investor that you wanna find. These are the investment vehicles you wanna find. Be it Bitcoin, be it really, really strong companies. I think they're really gonna prosper going forward. And that brings us to point number 5, and that is obviously what kind of investment strategy should the average person kind of work with or execute upon. And here is where I really started to think as well, because so far I've really had the idea that ETF investing is probably some of the best ways to invest. And to be honest, it's the very first time that this kind of belief is shaking a bit because of a couple of ideas that Buffett here also said. And Buffett has been pushing for ETF investing, but he is someone that especially over the past couple of days and obviously during this meeting kind of highlighted that in an ETF, you're gonna have companies who are just gonna get killed with this COVID-19 and with the recession and so on. And you have other companies who are just gonna thrive. So what might happen is that this ETF is just gonna be flat. And we have seen this actually in Japan. If you check the numbers with Japan over the past 20 years, my golly, if you just invested in a Japanese ETF, you would have made 0 returns. Maybe with dollar cost averaging, you could have. But if you had just invested 15 years ago, you probably wouldn't have made any money. And that's insane if you think about it. And the reason is simply because, well, the ETF is structured in a way that you have companies that lose and others that win, and in the end, they balance each other out. And it kind of changed a bit of my philosophy, and I'm actually gonna think a bit about my investing approach, looking into maybe there's better ETFs that you can pick out now. Maybe you need to kind of look for like really stronger, large companies that are managing this quite well and actually would work almost like an ETF because they're so large and they are so powerful. So these are just some things that really got me thinking. I'm not gonna sell Berkshire Hathaway. I think Berkshire, be it with Buffett, be it without Buffett, I think that conglomerate is very, 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 very strong. A lot of their businesses, well, they might be old and they might be old-fashioned, but there is a place for them to be, and it's just unlikely that these businesses will go out of business. And obviously they have a large cash position in case there's anything going wrong. My goodness, they can just get to work with this. So for me, that's a solid investment, at least in my book. And these are just some of the ideas here, but it was definitely interesting to see what Buffett had to say about all this, and it really got me thinking. What I'm definitely going to do is I've linked up the entire transcript below if you prefer the transcript. I've also linked up the entire recording down below. If you want, check this out, watch it, read it. Let me know your takeaways. What was the kind of thing that stuck out for you? Would love to hear this. Let me know in the comments. Would be very interested. Obviously, if you don't want to miss out on anything, then follow the channel here, follow the profile, click the icon, click the bell icon, and don't miss out on any of those things. At the end, if you're interested, my company Cake is all about bringing you crypto flow, between cash flow out of Bitcoin, out of cryptocurrencies. So if you are a cryptocurrency investor, you want to check out Cake. I'll definitely link this out below as well, cakedefi.com. Get your crypto flow from Bitcoin and many other cryptocurrencies completely transparent. We have the best rates in the industry, completely transparent. That's totally unique. So check this out. I hope I'll see you at the next video. Thank you so much. Yours truly, Julian.